The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 16th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that just simply empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two. The first one, brought to us by William Feather, goes like this: the happiest people are those that are too busy to notice that they are not. Have you ever thought about it? I mean, what a great sense, what a great belief out there. I know that is true. Number two, brought to us by Arthur Rubenstein, goes like this: I must accept life unconditionally. Most people ask for happiness on condition. Happiness can only be felt if you don't set any condition out there. And then the third empowering belief: the happiness of this life depends less on what befalls you than the way in which you take it. That was by Elbert Hubbard. I'm going to give you a Steveism. That kind of wraps them all up into one simple sentence. Cheerfulness, folks. Cheerfulness will open the door when all those other keys fail. Let's go check out the keys in the market here. Right now, we've got the Dow Jones off 37 points, trading at 15,238. S&P off 5, trading at 1653. NASDAQ off about 1 point right now, trading at 3470. Russell 2000 off about 4, trading at 984. NASDAQ 100 up a point right now. New York Stock Exchange down 38. We've got gold off $15, trading at 1380. Silver down at 22.50, trying to test that low of $22 out there, 6 cents away from it. Light sweet crude pulling back just slightly now, off 13 ticks. So really a flat session so far, 94.18 out there. Natural gas pulling back by about a nickel here this morning. Platinum off $12 in the futures market. In the currency market here, we've got the euro up just a tad, up 45 cents. We'll take a look at the euro. The Great British Pound here bouncing as well. That's up 60 ticks. That's putting a little bit of pressure on the U.S. dollar index, but it's got a confirmed A to B equals C to up right now. U.S. dollar index back by about 16 ticks. Our call-in number is 877-927-6648. Give us a call, folks. Let's start off by taking a look at the S&P 500, trading at that 1653 level. We know it punched through 1650 yesterday. 1650, it's a key level. It's a primary trading range boundary line. The S&P traveling in about 100-point swings out here. If you get a test of 1650 today, for example, and so far we are not there. You get a test of 1650. That means not a close, but a test of 1650 or less, and a close back above it. You get about 2 or 3 of those, and you know what that says, folks? It says it actually would want to go up to 1750 out there. It would want to go ahead and move into that next range. But one thing at a time here. If you do get a close below the open of yesterday, that was 1649.13, that will be a bearish engulfing candle out there. So that would also be a rejection of that 1650 level. So the S&P 500 on the daily chart, that's what we're looking at on my screen here. We can see it also had just slightly punched above the rising price channel. It did that yesterday as well. We'll see if it's going to get back inside there today and back below the 1650 level. And will it give us a bearish engulfing candle today? We'll just see. It's going to be dependent upon the close, and the number is 1649.13 out there. It's trading at 1654.56. That is on the S&P. Let's go take a look at the ETF structure itself. We'll start off by taking a look at the SPYs, taking a look at the volume out there as well. On the SPYs, we can see how the SPYs also testing the rising price channel. Now in the SPYs, they have completed almost completed a 1 to 1.618, A to B equals C to up. Your A point being the February 26, 2013 low, 148.73. Your B point on this would be the March 14th high at 156.80, and the C point being the April 5th low, 153.77. 166.74, that would be the magic number. Yesterday got up to 166.45. Quite frankly, that is close enough. That's within a quarter. So we can say that the 1 to 1.618, A to B equals CD, has been sustained, has been completed here. Yesterday's volume, really not too bad, 120 million shares out there. Where the S&P, where the SPY will find its first area of support on the way down, is going to be the level of May 3rd out there. That is the gap up. That is the bottom of the gap. That means it's the low of the gap up day on May the 3rd. That would be 161.04. The next area that would you would find some, and at about that area, if you just simply go across the chart on the right-hand side, what you'll see is that would also be a test of that rising price channel right around there. So that's if we start to see any kind of reversal action in the markets, but still too early to tell. What are you looking for on the SPYs? Well, the SPYs, you'd start to get an idea of a reversal. Number one, if you get a close below 164.96, that would be yesterday's open. That would be the first time that we would see a bearish candle out there. If we go take a look at the, let's go look at the Qs here next. The Qs, this is the one we're going to want to really pay attention to because it's starting to get above that area of 73.10. It's at 73.82 right now. That starts to get me to feel a little bit more like this thing could make the 1 to 1.618. Or not the 1 to 1, the 1.618 butterfly sell pattern. It has made the 1.272. I'll get it out. Don't worry about it. At that 73.10 mark, but it's now starting to really pull away from that area. And 76.31, folks, that is the 1.618 butterfly. So what would it take to, I would have to say a close above 74 would probably do it for me. So far today, intra-session, the Qs have gotten up to 73.98. So pay attention to the Qs as well. We know the Qs had broken that .786 Gartley sell. And all you have to do is just sit back and be patient. This is like fishing in a pond out here. If there is going to be a pullback, it will just simply, it'll show it to you. It will play its cards. All you have to do is just watch the cards. It's just watching the dealer. That's all that you're doing. In this case here, you get to watch the cards at the dealer. You get to see their cards, and then you get to make your next move out here. Right now, it is too early to go ahead and make that move, knowing that 76.31 is potentially in the offing. Yes, we are in overbought territory, but, until the bears decide to show up for work, it is the bulls that have control. And inside the Qs right now, it is the bulls that do have control, even with Apple having made a decent pullback with volume yesterday. Of course, you had Google to offset that. Now today we got just the reverse going on. You've got Apple up 250, you got Google back $7, but needless to say, let's go take a look here at the IDEM. Let's just stay inside the ETF structure. Then we'll go take a look at the actual indexes. So we'll stay inside here. We'll go look at the small caps here next. The small caps did complete that 1.618 butterfly sell pattern yesterday. 98.67 was its high. That 1.618 expansion was off of the March 15th swing point high. That was 94.96. The swing point low that it was being measured against in order to create that 1.618 expansion, that was the April 18th low. That was 89.13. That pattern here completed yesterday. Right now, today, an inside day. No information, at least on the daily chart. Volume yesterday was 34 million shares. So what we still have out here, let's see, do we still have it? No, we do not have the tiger butterfly inside the IWM. We don't have that because of the trading session on May 10th. 39 million shares was exceeding the volume of our X point of March 15th that had 35 million shares. Still a butterfly, just not a tiger butterfly out there. If we go take a look and finish this off, we'll take a look at the Dow Diamonds. The Diamonds yesterday moving a new ground, moving a new territory, getting up to 153.01, doing it, though, on really light volume. 3 million shares out there the day before, 5 million shares so far today in trading. Well, let me take a look at that. Yesterday was 5 million shares. My apology. And the day before 5 million shares. Today has got volume. How about that? In the first 45 minutes of trading, we're looking at 3 million shares so far inside the Diamonds. Diamonds here are waking up. they're waking up, baby. Let me go over and take a look at the Dow itself, see what we've got going on here. Geez, I got volume in here, but if we take a look at the, I gotta refresh my chart here. Let me hit it. Let me knock it upside the head. Make sure I've got good data here. There we go. I'm knocking it upside the head, but looks like the data is good. 3 million shares now. As I take a look at the Dow, must be IBM. IBM is up $2.21. So that is, if you take a look at the top 10 or 15 out here, IBM is the only one that is in the green. The next one in the green on the way down, 1 through 30, is United Health. The reason why I chuckled just a bit is because you got an island reversal inside United Health out there. We got volume off the top inside IBM. You got J.P. Morgan Chase is up 16 cents. Coca-Cola's up 14. Microsoft's up 19. Intel's up 4. Cisco having a nice morning this morning for sure, up 256. HPQ, Hewlett-Packard up 21, and Bank of America up a penny. Otherwise, the other half of the, more than half of the Dow is in the red. Largest dollar-wise to the downside is Walmart. That's off $1.67, but Walmart's stock chart looks pretty darn good. We took a look at that during the first trading session out here. So inside the diamonds, not seeing any kind of reversal signal here just yet. Let's go take a look at the actual index itself, see what the numbers are out there. We'll go ahead and start off by taking a look at the Dow. Let's do that. As soon as I can find it, we'll pull the Dow back. We can see the 1 to 1.618, A to B equals CD, that it is trying to hit. That would take you up to 15,338. So far, yesterday's high was 15,301 out there, so pretty close to completing that pattern inside the Dow. You'd like to actually see it hit that. That would be testing the upper boundary line of that rising price channel. It's a shorter-term rising price channel for sure, but it's the one that takes you back into the November 16th time frame out there. So looks like the Dow 15,330 would certainly be in the offing. You would complete the 1 to 1.618, A to B equals CD, as well as really tagging the top of that rising price channel. You hit it yesterday for sure as it got up to 15,301. Right now, not giving you any real information. We do know that the Dow is also in the overbought territory on the daily chart out here. Here's our NDX 100. As we take a look at the NDX, you can see it's starting to make its way above that 1.272 butterfly pattern, just like in the Qs right now. The NDX traded out at 3,009. Been up to a high today of 3,015. Let's go look at the composite, see what the actual NASDAQ composite here is doing. Give me a moment. We'll pull that stock chart back. That also breaking above this 1 point. They don't, these indexes, they don't care about these butterfly patterns, or so it seems. That had formed a butterfly pattern at 34.29. I'd say that is moving on out of here. What the composite is doing, though, is testing the top of the rising price channel. No bears in sight here just yet. 877-927-6648. The Dow is off 18. The S&P is down 2. Russell down $2.30, but no real bears out there. We'll be right back, folks.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Really flat sideways market out here. Dow's off 10 points. S&P's off 1. Composites up 6. Russell is off a point out here. And, you know, one of my favorite candle patterns is that hammer. Candlesticks out there is the hammer. And when they get broken, boy, they give you a lot of information. You know that when they're broken, when you're long, that's right, you're wrong out here. And that is certainly the case here in the equity called... let me actually get the name here. Infinity Pharmaceuticals, INFI. It had a little hammer out here. Let's pull this back. That hammer candle formed right here on May the 10th. That low was 30.50 out here. This morning it's getting cracked good here with volume, a break below it. That says if you're long, you're wrong. That says that Infinity, INFI, which is Infinity Pharmaceuticals, that is going to head all the way back to its most recent breakout, but it's starting to pull back into that area with too much volume. December the 10th, that's where it broke out, but that was on 3.9 million shares already today. In 1 hour of trading, 2 million shares. So it's coming back in there. That is not how you want to come back into a breakout area. If we take a look at A to B equals CD down, your 8 point on this, you could use the April 3rd area, that little bearish engulfing bear sash candle. That would be April 3rd's high. 50.40, that'd be your 8 point. Your B point on this would be April 16th. That low, 37.38. And your C point would be the retracement up on April 29th out at 44.50. The B point out here had volume of 1 million shares. That B point was broken with 2.3 million shares. That's how you confirm an A to B equals CD down in the art of the charts out here. Now what we can see, that hammer, when it made a move down to that 31.46, that would have been a decent area to have considered a buy, except for that volume as that area was being formed on May the 8th out there. It was kind of coming in with a little bit too much zest out there. 2.8 million shares. You like to see volume decreasing on the way down, not increasing, which is what we saw inside this equity here. Now today, it's going to come all the way back into the area where it broke out here. It's going to test that low of 21.40, but it is doing it on just simply too much volume. And speaking of the art of the chart here, folks, if you have not had a chance to go over to the homepage of TFNN.com, you got to ask yourself why, because it is absolutely the coolest tool for being able to scan charts. If you are number one, if you are just trying to determine what charting package should I use, how do I learn these A to B equals CD patterns, how about Gartley's, how do I find those? Boy, wouldn't it be nice to understand the real strength of a move on a leg, on an A to B leg? How do I even identify swing points? What type of volume is it, a swing point? Geez, I think the list could actually go on and on. Well, go over to the homepage at TFNN.com. David White has put together a series of great videos so that you can actually see the chart. But better than that, folks, go ahead and actually test drive it for 30 days. Unconditional money-back guarantee. Plus, take advantage of the Tiger Dollar promotion that we've got over on the homepage of TFNN.com. You can make 20% on your money. That means that for any purchases above $500, we'll not only give you 20%, well, even if you bought $1, you'll get a 20% bonus here, but 500 or more, an additional 5 to 10% will be contributed on your behalf to the One Fund out there. So this program only comes around a couple times a year. Please go over and sign up for Tiger Dollars, and I would go ahead and I would invest those in the art of the chart out here. Folks, $59 a month. And it's got all the tools. You want to talk about saving you time? I'm going to show you one of the coolest tools, and that is the scan here for the Gartley patterns out here, for butterfly patterns as well. Over, and if you're watching us on Tiger TV, that's a beautiful thing, because you can see I just clicked one button that opens up a window, and you can see on this window here you can get a quick scan of charts at 52-week highs or lows. You can get just simply the top 100 stocks, the bottom 100 stocks out in the market, who were the advancers, who were the decliners, gaps up, gaps down, but it's really this lower right-hand area that you should be paying attention to. It's that download that Gartley list. You click on that and boom, voila. Right there in front of you, it shows all the Gartley patterns here. I'm just going to click on the first one that comes up. That happens to be there we go. It is Agilent Technologies. Now, what I've got here on my screen, this is where it shows that they had broken out with volume here. David has put in the area that would be the ideal buy area. That's where he automatically creates and calculates confluence. That would be this little blue, maybe it's a gray shaded area. If you're watching us on Tiger TV, if you're just listening on the radio or your mobile device at TFNN.mobi, thanks so much for doing that. But look at the beauty of this. Now, if you take a look, all I have to do is switch over here to the Gartleys, and it'll go ahead and we're going to go to break here. But there is your potential butterfly pattern that is actually setting up here. Would you take this trade? Absolutely not with that butterfly. You had a nice gap up into it, and that's not when you actually go ahead and sell a butterfly pattern. But what a beautiful piece of software. Congrats to David White and Tom O'Brien. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow off 18 right now. S&P off 3. Composite almost, it's up $1.51. Small caps off $2 out here. And let's take a look here at what's going on inside the currency market. Let's start off by taking a look at the intraday chart here of the Queen Bee out here. We can see that the Queen is trading out at 1.2913 out here. We're talking about the euro. On the 30-minute chart, it is moving up into that overbought territory. Should find some resistance here at that 200 period. Exponential moving average right now, that number is 1.2940 out there. I suspect that's where it will run into resistance here. Let's go ahead and get rid of the couple of lines out here on the charts. Let's get rid of that formation tool because we can always add that back in here. Now as we take a look at it, If we take a look at just simply, let me put this other tool. Let's see what kind of expansions or contractions of swing points, see if we've got anything. So right now at this level, you've got a 1.272 expansion of a set of swing points. But I suspect that where this will run out of gas really is going to be a test of that 200 period exponential moving average. Last time that it was up in that range was before it decided to fall off of the cliff, and that was at 5:30 in the morning on May the 14th out there. So watch for that level to be attacked here. What that will set up then, that will set up a market that will continue to trade sideways here, maybe a bit higher. You'll see the euro move up. You can see it's in overbought territory. That will go ahead and work its way off, most likely work its way off by starting to sell down. When that does that, that'll go ahead and put some pressure back in the markets. That'll put some more pressure back on gold and silver because you will see the U.S. dollar index continue then to get stronger. So all that the euro has been doing here is really working off a oversold condition. That now has been worked off on the intraday chart. It's now gotten overbought, and it's just a matter of time before the bears step in here, and that is inside the euro. That is looking at the 30-minute chart. We take a look at the Great British Pound out here. Let's go take a look at this. This is not a 30-minute chart. This is a 120-minute chart out here. Let me refresh my screen, make sure I've got all the accurate data. I was paying attention to the area of about 1.508 and 1.512 as a potential buy range inside the euro. Still really looking for that area. It's traveling below the point. Now, if you take a look at this chart here, so this is the Great British Pound. I might have said the euro, and if I did, my apologies. So if we take a look here at the Great British Pound, this is off of the bottom, was off of the bottom on the daily chart with conviction. What was nice about this chart here was the mere fact that it had a nice little rising price channel. It finally broke through that. I didn't like to see that, but it finally broke through. I'd like to see that for a potential buying opportunity. Broke through that here at 12 noon on May the 10th. Now, when it did that, it also went ahead and it got below the 0.382 retracement area. That's coming off of the low that was seen back at about 6 a.m. in the morning or so back on March the 12th, right around the 1.483 level, all the way up to the high that has been made thus far, which is out at 1.5606 out there, and that came in at May 1st, the high on May 1st at about 4 going into the 4 p.m. close. So you're below the 0.382 level. You can see that what it also did was it made a 100% move of a move. This figure back here, this is back at 8 o'clock in the morning on April the 23rd. When you do a 100% move of the move, what are you going to do? You're going to do something else. It was making that 100% move of a move. It was getting into the sold condition. It's had to work its way off, just like the euro. Now, this is a little bit longer-term chart than we looked at on the euro. It is doing that here just yet, and it looks to me like what the pound wants to do is the pound wants to move down into the sweet 618 level, maybe also make a 1.272 expansion. So this is my potential buy range out here. I'll watch to see how the pound moves down into that area. I won't be just looking at the 120-minute chart. I'll also be looking at the 30-minute chart as well. So we'll see what the pound does as it gets down there, see if the bulls step in, see if we're down towards the bottom of that relative strength indicator, and it may just turn out to be a short-term trade. But to me, that is the area to be paying attention to. But right now, it's really doing what it should have done after it made that 100% move of a move, and that is on the Great British Pound out there. If we go take a look at the U.S. dollar, Japanese yen currency pair, this thing just really hanging out here up at its highs. Let's put this on the monthly chart. Go see what the monthly chart showing you that could go just a tad higher, the 0.382 retracement off of the highs that take you all the way back into 1998. Well, that number 103.09. What we've seen here so far is a high of 102.75. And you can also see that it is running into the top of its descending price channel. We'll see if the Japanese yen is truly going to break out of this area. It's been one heck of a nice move out here, but it should start running into resistance here in the not-too-distant future. That would give an opportunity perhaps an opportunity for a pullback in the market. So we'll see what happens as it gets to that 103 level. That was on the Japanese yen. If we go take a look here at, let's see, what do we want to look at? Let's go look at Goldilocks. See what gold is doing out here. If we take a look at Goldilocks right now, it's trading down $11 out at 13.84. At 13.84, we can see here this was really the short-term consolidation move. Gold had traveled in a sideways consolidation from about the April 24th time frame, broke that here a couple days ago, yesterday on May the 15th. That says that the equal move down should have been right about 13.57. So far it's been down to a low of 13.68, an equal move when you break a consolidation level. It is trading right now right at that 0.618 area, which is 13.85. So volume-wise, not big volume today, 148,000 contracts. It's still trading inside this swing point of April 16th. You stay inside that swing point. It says it wants to test the lows. That's really what I want to be able to see here. I'd love to see it go test that low of 13.2150, do it on lighter volume, come back in with a nice little bullish candle, and then I would say that gold is cementing a pretty decent bottom out there. Of course, the first one to maybe test that bottom will be, or could have already been, silver. We'll see here. Silver today getting down to 2206. 32,000 contracts. That is a acceleration that we have seen here because we're still early in the trading session. Yesterday, 39,000 contracts. Of course, that's moving into 200,000 contracts, so not enough to bust it down, but stopping just before the swing point, that's never a good sign out here, and especially as volume starts to accelerate. So you've seen a little bit of a bounce here inside silver. Let's take a look, see if I've got a quick intra day chart out here. Nothing that we're going to go pay attention to. This is the if it does break the lows of $22, then $17 in that area, in that range, is what you want to be looking for. That would then be the buy on silver out there. If we take a look at natural gas getting hammered here this morning, a big reversal session. Volume so far 71,000 contracts, pulling back into the swing point that has 90,000 contracts. So look for this to go back and test $3.88 out there. Light sweet crude, on the other hand, that is the bulls here really trying to take charge. Now we're looking at a rising price channel, kind of an ultra short-term rising price channel, but nonetheless. And when you break any kind of channel line, what price will do is try to get back in. Well, it tried to get back in yesterday and formed a hammer candle. You're getting some additional follow through. Has not broken back in. The finest bullish move on this is going to be a close back inside that rising price channel. And that will say that light sweet crude wants to move higher, wants to move back and at least test the $99 area, which is the February 13th, 2013 highs out there. Let's finish this off and go take a look at James Bond, the 30-year Treasury out here. That, folks, now there is a signal. The bonds absolutely now have put in their bottom in the marketplace. At least that is the 2-day. Now this candle here from yesterday, it's very close to a bullish counterattack. It's the weakest candle, but today's follow through on this now giving it some very, very much some impetus. The bonds here have now made a low. That's what it looks like to me. It looks like what we have now set up is the C point of an A to B equals CD. That says 155.25 is back on the target range. That'll take you back into November 16th highs. That was 152.21. If we take a look at that retracement out here, the B to C retracement ended up being just underneath the 618 level, which was 143.30. So bonds on the move. That ought to. We're not seeing the same indication, right now with the flat market out here, but bonds are screaming that they want higher price. When you get it closed today above the level of 144.22, that will be your confirmation, and we're above that area here right now. So bonds look like they have formed their bottom out here. Had a request to go take a look at Goldman Sachs. GS is the ticker symbol. So let's go see what Goldman Sachs is doing out here. GS, give me a moment. We'll go ahead and pull this back here. Goldman Sachs looks like it is wanting to make a run for its highs. Its most recent high is the swing point out here from February 19th, that level 159, even Steven out of there. One of those round number highs that Basil Chapman just absolutely adores. He loves those round number highs out there, and for good reason. We had a little bear sash on that following trading session with a gap down with 8 million shares on that gap down. Right now, as it moves up, so far today, only 1.2 million shares. Yesterday did about 4 million shares. Going into a swing point with 5 million shares. Going to need some more energy. But right now, Goldman Sachs is going to go tag 158.50. A move slightly above it. Close back below 158.50. If you can't bust them up, it'll try to bust them down. And busting them down in this case here, I would say, would bring it right down into really the most recent gap up, which took place here on May the 3rd out there, that low of 145.06. It did have some nice accelerated volume here on May 14th. That was a couple of trading sessions ago, 5.8 million shares. So that's what Goldman Sachs looks like it is doing. Oh, if you come all the way back over here, it's running into a huge supply line. Let's put this on a weekly chart now and take a look at GS, Goldman Sachs out here. Here's a couple hammers. We talked about, well, let me actually show the hammer out here. You got it right there. Here at Goldman Sachs here, we're looking at a weekly chart, and there's just simply a stock here. When you break those hammer candles, it says look out below. Goldman Sachs on the weekly chart here, taking you back for a stroll in history. Excuse me, the week of February 25th, 2011, that had a hammer candle. That was broken. That set up your second bullish position, which was a hammer candle 2 weeks later on March the 18th. That low was 153.26, and once that hammer candle was broken, it was sayonara. It did make a brief stop at the 100% move of a move, which was down back in July of 2010. Made a stop there for a few weeks and then went ahead and continued lower into the lows of October of 2011. If we take a look at retracements here, let me just actually, just for the heck of it, let me just see what this identifies for us here. So, okay. So we're taking a look at the retracement off of the highs back here in January of 2011. Looks like that was a 0.786 retracement that it has made up here on the weekly chart as it got into that 159 level. That's where it's headed to again. If we take a look at a convergence of retracements, I would say I'd come all the way over here, yonder, to the highs put in October of 2009. We'll go ahead and change the look on that, see if we've got a convergence. So you've got a convergence of the 0.618 and 786 level that it's really taken out, so which is right in the 156 price range. So 150, where it's at, it looks like it's going to find some decent resistance out here, and that is on Goldman Sachs. Let's take a look here at, give me a moment. Let me switch over and take a look at, so we got Regeneron Pharmaceuticals having another tough day out here. That is now the leader in the clubhouse on the way down. It's off $10. So let's go take a look at that. That is probably just pulling all of the pharmas out with it. REGN is the ticker symbol. So let's see if there's any kind of volume behind it. Give me a moment. I thought I had it up here. And, of course, I erased that too. REGN, so let's go take a look at it. Trading here. Yesterday gave us a bullish candle. Now, volume-wise yesterday, a bearish candle, I should say. Volume-wise yesterday, not a big deal, 844,000 shares. But today, in an hour of trading, a little over an hour, you're at 288. So this is going to come back, and this is going to test the most recent breakout. I would say where it really wants to test is this high-volume bar out here from May the 1st. The top of that would be the price point of 252.35, and the volume there is 4.7 million shares out there. So it looks like that's what it wants to run back and test, and that would be on Regeneron Pharmaceuticals. Let me take a look at some of these other stocks that I actually have on this screen out here. So we've been paying attention to Theraptic, I think THRX. That is, the name escapes me here just for a moment. THRX. That is, what is that? Theravance, right? Yeah, Theravance. So we're taking a look at Theravance because it had a three-gap play that is out here. So we're paying attention to it, and that third gap was the largest. Big, strong stock. Don't go short this. But we just want to pay attention to this equity here on that three-gap play. That is Theravance, THRX. pulling back a bit here this morning as well. 877-927-6648. Dow is off 10. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and one of the dry shippers is on the move today. We're looking at dry ships, DRYS, accelerated volume, a big, wide-ranging bar here right now today already we've got 13 million shares in this equity. It was very close to completing a Gartley buy pattern with real nice Fibonacci numbers. 165 would have been that number. It actually got down to 170, so we can say that pattern basically completed. It was coming back into the area where it had recently broken out. You had some nice high volume on January 4th, wide price spread. That was your first real sign of strength inside this equity. It had also formed a real nice hammer candle right here on the trading session of November 16th. That hammer candle was tested most recently back on April the 18th, and this thing has taken off topside with some volume. So you can see here the retracement so far already, the 0.618 retracement. This looks like this may be setting up an A to B equals CD to the upside. That is the ultimate outcome of any type of Gartley pattern. In this case here would have been the Gartley buy. That A to B equals CD would say 268 would be in the offing. That would take you all the way back to your swing point inside dry ships back to September 19th, 2012. Let's go out to Denver, Colorado, to Monica. Monica, thanks for calling. Thanks for holding. How are you this morning?
Oh, just great. I wonder if you could give me your reading on MasterCard.
Absolutely. Are you in it, looking to get in it? Tell me how I can help you there.
Well, I have a spread on it,
okay.
And I did that back on May 1st, and it looked like 570 was going to be okay, but obviously in the last 2 days we've passed that. So where do you see it going from here?
Boy, it's a great question. You know, it's at all-time highs. In essence right now, or the high that it hit so far this week, which was 574.95. So it's up over any kind of resistance areas for sure as we take a look at whether it be a daily chart or a weekly chart on the screen. So as far as where is this thing going to go, you know, and you're looking for more of a shorter term standpoint. So let me just come back to the daily chart out here. You know, it is towards the bought territory, but pretty decent volume over the last 2 days. Almost 700,000 shares, 655 each day out here, and that's up over really any kind. I don't see any real downside right now inside MasterCard, so it looks like it actually wants to continue running higher. I suppose if we use just simply the tool of taking a look at a consolidation range, so we'll go ahead and do that, Monica. And the consolidation range that this was traveling into, looks like I'd say the consolidation highs would be right around the 546 level and the low where it had last broken out, right around 501. If we now go ahead and just apply that tool here and assume that it's going to, since it's broken that consolidation range, it's going to make the same move, I would say right around $592 or so. So maybe another $20 to the upside would be the full one-to-one of the consolidation. When you break a consolidation, you typically are going to do at least that level, sometimes more, or what have you. So I would say that's really the only tool that I could use out here quickly and give you an idea of where this thing might head to.
Okay. I really appreciate all your analysis.
Well, I really appreciate you calling. Really appreciate you listening. It's very nice. So please call back anytime.
Will do. I learn something every day.
Oh, that's great. Glad to hear it.
Thank you.
Hey, you betcha. Hey, folks, Basil Chapman is up next, and it is Terrific Thursday. You know what that means. Larry Pesavento is after Basil, then Daryl Martin, David White, and we have Andy Hecht in the 3 to 4 o'clock hour in the Tom O'Brien Show from 4 to 6. Remember, folks, the way you do anything is the way you do everything. Become a pioneer of your future. Do not become a prisoner of your past. Have a great day, folks. Look forward to seeing you in the morning. Take care.